Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Wednesday, 12th of October, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll dip into the earnings calendar. We're not quite at this place where earnings are going to really become significant, but we will look at the calendar anyway. Getting close to that though. And then we'll also take a look at articles from the major news wires. What are those macroeconomic fundamental events that are impacting markets right here, right now? And we'll also take a look at some charts, see what's going on. If you want to throw in the chat a good morning. So good morning, Jason. I'll give you all a little good morning. So welcome everyone though. So let's take a look at the data first of all. We had, not massively important for our markets, but these are actually UK markets, as we said previously. The last few weeks with the chaos regarding the mini budget we had, the tax cuts, the Bank of England getting involved, the weakness in the pound, the aggressive spike higher in yields that we've seen in the UK, has all had little knock-on effects into global financial markets. So we had GDP data in here and the UK teetering on the edge of a recession in here. We had a negative result for the month-on-month GDP in here, the year-on-year running at 2%, the month-on-month at minus 0.3%. And the monthly GDP at minus 0.3. So teetering on the edge of a recession in the UK. Industrial production data out of Europe for the Eurozone as a whole actually beat expectations in here, so a slight positive there. We have going into the balance of the day, we have PPI coming up in just under an hour, usually very much a non-event for markets, doesn't usually impact markets, given we have the CPI data, the far more important data that we have coming up tomorrow. However, if PPI is significantly out of line, it could have an impact in here. We also have the Fed meeting minutes tonight. All focus on that. Well, not that's tonight, sorry, my time. For you guys, if you're in the US, so if you're in Europe, it's this evening, but it's 7 o'clock this evening, UK time. In Europe, 8 p.m. And if you're on the Eastern time, US, Fed minutes come out at 2 o'clock. We also have Bowman speaking later today. We also get ECB President Lagarde. She really rarely has an impact on markets when she speaks, but she is speaking later today at 09:30 Eastern. So kind of some fairly busy, but the real focus on the Fed meeting minutes going into this afternoon. On the earnings side, remember in here, when we look at earnings, we do the filter in here. I'm only really interested in the big boys in here, so I'm ticking the 3 stars on the investing.com earnings calendar. I'll share that again in the chat. Go to investing.com, though, you'll easily find the earnings calendar. But it's in the chat, so take a look at that. If we look in here, going into today, we've got PepsiCo actually already out, beat expectations slightly in here. So beat on the EPS and the revenue side. Really, next tomorrow and going into Friday are going to be far more important. BlackRock, kicking off with the financials. We'll also get Walgreen Boots as well. Be interesting to see how retail's doing. But then the financials continuing on Friday with a whole host of financials, JP Morgan, Wells Fargo, Morgan Stanley, and Citigroup all reporting amongst the big boys on Friday. So that's really going to be the big focus at the end of the week. Let's take a look at some of the articles from the major news wires. 5 things you need to know to start your day. Fed raises rate in the economy side. Biden played down recession risks in here. Real confusion. Loads of articles on this today. Confusion reigning in bond markets in the UK as investors struggle to keep up the Bank of England and the UK government's policies. Andrew Bailey issued a rare public ultimatum at the IF meeting on Tuesday, saying the central bank will end its emergency gilt purchases planned at the end of this week. So the emergency gilt purchase, remember, was the Bank of England's stepping in a couple of weeks ago after gilts plunged lower in price, higher in yield, okay? And that drove global bond markets lower in price and higher in yield. So they came in and said they were going to do these emergency bond purchases, these gilt purchases, and they were going to end at the end of this week. There was full expectation. The markets was expecting that to roll out because gilt yields have gone back higher again more recently. I can probably show you that if I go into here on these. So this is the US. Let me go and get government bonds. Apologies. for the delay on this. I didn't do this earlier. Let me just, actually, I'll just scroll down. It's usually quicker in here to the UK, given it loads quickly. Okay, so we go here, say UK 10-year gilt in here. And we look at the technical chart. Just give it a little second to load. Bear with me here, guys. So here are the yields, you can see. I'll put a little candle chart on. Boom. So this was then when we had the panic stations in here. The market aggressively went up to higher yields when it was announced. So we had it back announced here on the 23rd. And then on the Monday and Tuesday, we had an explosion in yields, these 10-year yields. And then the Bank of England that day there, that big red bar, which is lower in yield, higher in price. That's when the Bank of England stepped in and said they're going to bolster the market. And we did go lower in yields, okay? But now, look, back above the yields. And this is causing real problems. And that's partly because they've effectively, backed down, backed away from what they, from this kind of support they're giving the market. So we're getting higher yield pressures. And that's having knock-on effects. I've set up in here to look at if you go take a look at the bond market in here, look at 10 years. Look at the daily chart on the US futures in here. And you can see in here lower yield pressures as well from 10-year futures. And this is being impacted a bit in here to an extent at least by movements, obviously, in the UK as well. So it's having an impact into US markets as well. So, just going back to there. So, and there's a load of articles as we run through. I'll go through these. So, basically, at this meeting, Bailey said that the central bank will end its emergency gilt versus plan at the end of the week. Hours later, the financial reported that the Bank of England briefed bankers that it might keep the programme going. So it's complete confusion, citing comments before Bailey spoke. So that prompted the central bank to reiterate that bond purchase will end on Friday. So backwards and forwards. Gilt yields whipsawed as a result before ultimately climbing towards multi-year highs seen at the end of September. We've already discussed that, okay? And so, real worries about that. Earnings watch, chip makers take centre stage as the earnings season rolls closer. Well, Intel, but are they? I don't think. I think, financials are going to take centre stage over the next couple of days. And then markets whipsaw. UK stocks appears to set to snap a 5-day loser. So we had a rebound in stocks in here. They tried to rebound yesterday, remember. We had a rebound in US stocks, a rebound in European stocks, and gave up that little rebound. They went actually lower early in the session, pre-market open. They rebounded after the open, but it was a dead cat bounce, very slight rebound in here for stocks, and gave up those rebounds into the close and actually ended up closing right on lows and new multi-month lows in here for US stocks. We've had another rebound this morning, similar to we had yesterday, though. Is it a dead cat bounce? Obviously, all focus on Fed. Right. And just going through what we've got coming up today, as I say, look, Bank of England speakers, they're going to be particularly important. Lagarde speaking, we've also spoke that. Fed's September meeting to interpret. So we've got the minutes as well, and PPI. We've already mentioned all of those things in here. Right, let's just run through some of the headlines. So stocks rise, gilts tumble. So tumble, that's gilts, UK bonds. Gilts tumble, lower in price, higher in yield. Amid UK policy confusion, we've already gone through all of that. And currency markets whipsawing as well. UX equity markets futures gain ahead of the minutes. So UK 30-year gilt yield tops 5%. Pound jumps as confusion grips markets. Yeah, so there's real confusion in the UK in here at the moment, and that is having a knock-on effect into your markets, guys, into the US markets. That is Bailey's warning sends shivers through fragile bond market. That's from yesterday's news. And on the FX side, remember I spoke about this last week. Dollar yen is now pushed above levels where the BOJ intervened a couple of weeks ago. Okay, so interesting there. And so dollar yen up to through 146. So continue to rise in here with the broader US dollar strength that we're seeing. So obviously the market was a little trepidant about pushing through those levels previously, but now once it's broken through the previous high, because obviously the anticipation that we were going to get further intervention, well, now we've gone through that 145.50 area and accelerated higher. on the dollar yen front. And the pound, as I say, is higher in here at the moment as well because of that confusion in the markets. European stocks steady, investors malt earnings, Bank of England comments, same sort of stuff. US mortgage interest rates we're spoken about that. So interest rates pushing back higher, yields pushing higher in the UK and US. Seeing mortgage interest rates highest level since '06. Euro UK borrowing costs rise again as Bank of England sticks to bond plan deadline. Again, we've covered that. Morning big confusion reigns. Okay, and again, this is all going back. You've got 3 days left. The worst is yet to come. Okay, so this is all again about the Bank of England and the complete confusion we've got in the markets at the moment. Wall Street futures up ahead of today's FOMC. UK economy on the brink of recession as it shrinks in August. We spoke about that with the data, that GDP data we had. Bank of England gilt purchase will end on October the 14th, spokesperson. So will they, won't they? And then on the oil side, we had this pipeline leak, cuts oil flow to Germany. Accident blamed. Is it an accident? Who knows, right? This was the accident in Poland, okay? And that's seen it with oil prices previously retreated yesterday. You know, we had that big surge higher last week after the OPEC, bigger than anticipated OPEC cuts. Oil dipped lower over the last 24, 36 hours, but then it's rebounded this morning on this, obviously, a supply cut effectively. So where are we going into today? From the European bourses, the European exchanges in here, kind of mixed, you know, pretty much unchanged. You know, 0.25% up, 0.25% down, mixed in here this morning. No real kind of theme, marking time, consolidating. On the US side, we had markets, actually the Dow actually ended up. NASDAQ and S&P were slightly lower. This morning, though, we're about nearly 1% higher on the NASDAQ. 0.5% higher on the Dow and just 0.2% on the S&P. So we are seeing a bounce. A bounce has come. This is rising. The Fed Watch tool moving to this. So basically, it's now nailing on a 75 basis point hike at the next meeting at the beginning of November. So no real changes here. You know, this has just slowly been rising, having kind of rejected. Remember, this was at one point down, getting close to 50% a week or so ago, when we had this kind of all this talk of maybe a Fed pivot after the Reserve Bank of Australia, and then kind of completely have rejected that now regarding the pivot. Right, let's take a look at the charts. We already looked at the treasuries. You know what? I'll go into, while I'm on this tab, I'll take a look at. So here is the dollar index. A dip and a rebound yesterday in the erratic activity, sitting up at the recent rebound highs and then pointing higher for me. So dollar stays strong as treasuries in here stay weak, weaker. Treasury price equals higher yields, which is supportive of the dollar. So these two markets, you know, almost the upside down versions of each other, and looking for, it's still in here pointing lower in here. If we take a look at the oil market, so there's the sell-off that we saw yesterday, significant sell-off. We did go down and probe at support, but then has rebounded this morning on that pipeline news. And if we step into a 30-minute chart, for me, I think we've defended the support we needed to. So you see the support here. We just undercut this was the important support. Tried to hold this support around, what's that low there, spike low. I think I'd flagged this at 88.69 in my reports, kind of undercut there, but then held just about this low in here. That low there, 88.00. We went down yesterday to just undercut 87.91 and then bounced. So just undercut the 88.00 and then rebounded in here. I think the rebound's enough. You know, for me, this still stays kind of bullish in here. And if we go in here, and we take a look through here, you see we reverse this kind of downtrend line. Really, for gold to be more, oil to be more bullish, we want it back above that little peak there, that high there, 90.36. But prefer to play from the long side. I still think this underlying recovery theme, this uptrend is still very much intact. So for me, I'll be playing this from the long side. Really want it to see clear 90.36 to be more bullish. And let's take a quick nod to gold. With the dollar strength, obviously a gold weakness, a rebound failure in here yesterday, nudging down at support in here. It nudged at this support in here. So that low there, 1666.5. We went down to 1667.5 yesterday, 1668. So it's just holding this kind of support level in here. But, you know, if you go take a look at my daily, I'm just clinging on to a more bullish tone. I do feel there's real risk. It's just clinging. Whilst above 66.5, I think you can venture some longs. But if it surrenders 66.5, I think this will be downside risk coming back. And with dollar strength, you know, I think there is real risk lower in here. But you can see at the moment the market's kind of indecisive in here, but through 1666.5 on the downside, it all starts to look negative again. Right. Let's take a look at the indices. I know most of you guys are trading that. So the market has been more cautious on the downside the last three sessions, right? So the last two sessions and this morning. It's clearly on, this is the S&P, respecting this low that we posted at the beginning of October. So we've had a more gradual decline in here Monday and Tuesday are much slowing, having had that big impulsive move lower on Friday after the employment report, a slowing descent, but nevertheless pushing lower, okay? And this does to me say that the risk is still lower. However, we're getting this potential rebound. We're maybe on the cusp of a turning point. No surprises there, right? No, given that we've got two kind of quite big events for the US coming up. Probably the big event is the CPI data tomorrow, but we've still got Fed tonight. So watching out for those two. We could be at a turning point, maybe defending this low in here. So although I go into today more negative, if we take out resistance, this could easily flip more bullish in here. And if we take a look at this line that comes along here, this is from the last couple of days. If we get above here, and certainly above that peak, swing peak from yesterday there. So the swing peak's at 53 and a quarter. Through there would be bullish, certainly reinforced above this swing peak up here. That's at 67 and a half. However, this kind of line that's come, this kind of consolidation lines, you've got kind of this kind of triangle pattern sort of building in here. And you could put in potentially through here, or even to draw it through kind of more through here. You've got these support lines in here. If we break above this upside, okay, and that's coming in around 44 at the moment. If it gets above 44, I think we'll quickly be challenging that high up there at 53 and a quarter. And you've got two failure peaks in here at 35 and a quarter, 34.75. Okay, these two failure peaks from the last few hours in here. Okay, but I think through that kind of that topping line there, that kind of consolidation line, and I say that comes in around 44. Above there would then certainly signal upside in here. So watching for a potential break there, potentially getting a breakout signal in here ahead of the Fed. But obviously Fed's going to be super important too. Let's look at the similar on the NASDAQ. And the thing with the NASDAQ is it has undercut the previous October low. Prodded it on Monday, certainly significantly through it then, significantly enough yesterday. We've got those kind of dead cat bounces on both Monday and Tuesday. Is this another dead cat bounce? Again, if we zoom in, this is a 15-minute chart now. Again, you've got this kind of slowing consolidation phase. And again, probably looking for this kind of line that comes across here. And we're much closer to it on the NASDAQ. So back above the overnight peaks would basically take us through that line as well. The highest of those peaks are, we've got two peaks there, 10.976 and 3/4. Yeah, 10.9, 76 and 3/4, and 10.974. Certainly, if you've got a 11 handle on this, it looks more bullish. But I think up through those is enough. Through 10.980, it looks more bullish. It quickly then targets that peak. That peak up there, 11.039 and a half, and you got an old street load of peaks there. Through there is even more bullish. So up through like 10.980, and then up through that peak there is going to be the next trigger. Okay, so yeah, I mean it is sort of setting up for a potential shift. Obviously, it cuts back down through the kind of got this kind of triangle line maybe coming through here, or you could take it off the low. I'd be drawing these lines here. If it takes out these supports, then it looks more bearish again. I'd still be kind of wanting to play it from the bearish side, but the market's hinting. I'm only like, 55-45 bearish over bullish in here. Happy to flip to being bullish if it starts to take out these resistances. And you may get those signals ahead of the Fed minutes. All right. All right, guys, that's covered everything, I think. I'm going to leave it there. I'm going to wrap it up. I'm going to wish you all a great trading day. Be careful out there through the Fed minutes and through the open. I'll be back with you with another. Actually, James will be on with you tomorrow for Thursday's Bull versus Bear webinar. Have a good one till then. Take care. Stay safe.